This is an Investor Ideas exclusive podcast series with founder of Stock Analyst Guru, Richard Lazaro. Richard has years of an institutional equity experience as a stock analyst, portfolio manager, and stock trader. He's managed stock positions at hedge funds and other investment groups in New York. In this weekly podcast series, you will hear insight on learning how to trade based on support and resistance, market updates, and sector close-ups. For the full educational experience, you can check out stockanalystguru.com.
Hi folks, this is Rich Lazaro coming to you from Stock Analyst Guru for Investor Ideas. Today is Wednesday, August 15th, 2018. As usual, we are reporting about support, resistance, and trend of the overall market averages and of the major market sector ETFs. This information should help you to allocate capital to the market as well as to figure out which sectors to allocate capital to on the long and short sides. Today the S&P was down 21 points or 0.76%. The Dow Industrials were down 137 points or 0.5%. The Nasdaq was down 97 points or 1.23%. And the Russell or IWM was down 22 points or 1.3%. In case you're driving or otherwise can't pay total attention here, all the indices got crushed today, but they bounced pretty hard off of their lows. Anyway, that's not bullish. It's just there's a lot of support down there that's the first time you touch it, it will create a bounce. Today was a risk-off day. That's the import of today. Risk-off means that the very risky sectors, the Nasdaq and IWM, were down over 1%. That's 1.2 and 1.3% respectively, much more than the other averages were. Furthermore, the Dow hit the 50-day moving average today, and $250 on the DIA, which is the Dow ETF, was just about the low for the day. So that, of course, provided support for the Dow. The S&P bottomed at 2803 on the futures, very close to the magic 2800 level. But that also coincided with the Dow hitting the 25,000 level. So combined, they provided support there. The Qs, the triple Qs, bottomed right at trend line today. I mean, like right on the trend line, the long-term trend line, very key level. So they bought them there, and the IWM or Russell also bottomed right on trend line today. But the fact that everything hit support today and bounced means that you're still threatening support. It's just that we're going to get a dead cat bounce off of that the first time around usually, and then they bounce up. And if we fail again, then we're just going to plow through it. And I think there's a lot, as I mentioned a few days ago, we are in danger. I remember telling you, if you want to look back maybe 3 days, that the Russell looked like it was in danger of coming apart at the seams. This is not it yet, but we are getting, in order to come apart at the seams and break support, you've got to come down and test it, which we've done. Folks, that is job number one of the bears, is to get down there, tap it, let them bounce it, but eventually they're wearing away at you, just like we did at 2863 on the S&P a few days ago, where we were pushing through that ceiling. We couldn't do it for 3 days, and finally the bulls gave up, and the bears smushed it down to where we are now. Likewise, that can happen on the downside, except if they get through it. If the bears can push through it, then they win, and we go down much farther. If that happens, you do not want to be long invested here. If you fall through long-term trend support, then you've got no support under your feet, and you don't want to be long in that case. In fact, the triple Qs under 177.50 is very ugly. It's a lot of danger right there. Right now we are at 179.25. So, and it looks like we're up a bit in the aftermarket as well. So any bounce here, if they try to bounce them up one more time to resistance, we better get through that resistance. If not, they're going to bring them back down to support. And at some point, the bulls are going to lose. The pundits on TV were attributing today's dump to continued tariff machinations with Turkey. I mean, Turkey is like 1/50th or 100, of our GDP. I mean, we don't do that much business with them that this should really create this much excitement. It's really bogus. I think it's just more technical. This has been happening for the last number of days since we've hit the 2863 top, maybe 8-9 days ago or so. And this was already in progress. Furthermore, crude was down $2.14 today, or 3.2%. to its June lows, matching its June lows, and tapping its 200-day moving average, both of which need to provide support here, or crude goes obviously much lower. So you play it off of that support. So let's get to the ETFs. So the XLE, the energy ETF, of course, took a huge dump today, more than the market by far, down 3.5%, as its commodity, crude, was down 3.2%, and the market was down a ton. So it's like a double negative. That sector just got crushed. Fell out of bed today, just fell off of the map, fell through its entire floor of support, and just went straight down. Biggest down move it's had probably looks like all year. Wow, that's not going to help the averages. And it went through its 200-day moving average today. If it cannot get over its 200-day moving average tomorrow, a lot of people are going to be throwing in the towel in that sector, and there'll be a lot more downside coming. That's not going to help the other averages that have oil stocks in them. Conversely, consumer staples did very well today. The XLP up 22 cents or 0.4%. Investors are flocking to defensive stocks and getting out of risky stocks. This sector is clearly in an uptrend for many months now, since the May lows, and just had a nice pullback to trend line, and has been bouncing the last couple of days. So nice sector to hunker down in. All of tech got crushed today. The SMH was down 1.6%. XLK was down 0.9%, which is less than the triple Qs, which was down again 1.2%. SKYY or cloud was down over 1%. Software was down under 1% at 0.64, so outperforming here, but still down. And cybersecurity was down just over 1%, 1.03. The XRT retail was down 2.7% today on the back of Macy's, I suppose. Yesterday, XRT, as we said, made an all-time high. Today, it's below the low of the week, so a total flip-flop there. And looks like it's pointing straight down. Looks like it should potentially go down a little bit more before it turns around and resumes its uptrend. I see support down around $49.50, $50, give or take. And the XRT is 50 and 45 cents right now, so about $1 or so down. The IYT, or transportation sector, performed very well today, closing out the day about flat, ostensibly due to huge dump in energy prices. That's one of their main inputs, so that's going to make them more profitable. Gold was down 1.6% today, the GLD, but the GDX sector was down 6% today. Totally got crushed. I didn't mean to chuckle there, folks. You don't usually see an ETF going down 6% in a day. I don't mean to. If anybody's in the GLD or the GDX, my apologies. But the sector is now making a low since, I guess they're matching the low that it had in December of 16. Prior to that, we haven't been lower than this. I mean, right on the nose is where it stopped. March of 16 was where, if we go below today's low, we're looking at, we could be heading back down to, goodness, we're at 1860 right now. There's not much support here until maybe 1750, yeah, maybe around $17. There's some support. There was some exciting news in cannabis land today. CGC, or Canopy Growth, got a huge investment from Constellation today, setting up the shares $7.50. This spurred some excitement in the group, and sending Afria up $1.33 or 20%, and Aurora up 78 cents or 19%. All right, well, I could talk forever about this market. There's so much going on, but I do have a thing to get to. More tomorrow. Have a good evening and safe trading. Peace out.
Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website. And this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. To hear more podcasts, you can visit our audio page at InvestorIdeas.com/audio. And a reminder, you can also hear our podcasts on Spotify, iTunes, TuneIn, Stitcher, Spreaker, iHeartRadio, and Google Play Music. To help you follow and track sectors, Investor Ideas has created stock directories of publicly traded stocks for investors to use as a research tool to start trading and investing. Visit www.investorideas.com/membership to learn more about our stock directories and leading sectors.